check. You can also check YouTube. Don't know if my screen is visible. Is my screen visible? Is my screen visible?
Yes, Prof, it's visible.
No.
Okay, so this syllabus is actually effective in November 2024, okay? But then we have to look at a few things and see how they relate to your exam, okay? So as I told you, we will be starting with the professional level. Okay, so start with level 3 first. Okay, this one, I won't take so much of your time, but we'll look at some important concepts, right? So level 3. I hope everyone can hear me clearly. I hope everyone can hear me clearly.
Yes.
Okay, so we start with the professional level, and the first course, which we'll be looking at here, is corporate reporting. Now, it says what? The aim of this module is to ensure that candidates apply the appropriate judgment and technical competence in the preparation and interpretation of financial statements for complex business entities, right? Complex business entities. That's the word they use there. What is a complex business entity? So here, the main focus is that you are going to be preparing accounts for group entities, right? That is the focus. At your lower level, you are mostly going to be preparing accounts for single entities and also groups, but it wouldn't be like this, right? All the standards, you don't learn all the standards of financial reporting, but here you learn all the standards and their interpretation sometimes. Now, you must also be able to evaluate and communicate the impact of current issues. Now, this is what they've introduced now. This used to be in our 2015 syllabus, right? But then it was taken out and then it has been brought up again, but now with a lot of IT stuff, okay? So why, if this is effective in November, why am I talking about it now? I told you that anytime you are preparing for a new diet, okay, the diet before the new syllabus, okay, there's going to be a snapshot, okay, of the new syllabus in that diet, meaning that you are going to see a little bit of current issues, especially now when you are doing standards. Almost all the standards have a bit of ethics in them. Okay, so when you are looking at standards, you also have to think about the potential risks or the potential ethical issues which can what? Arise. Do you get the idea? So you must be able to evaluate and communicate the impact of current issues and developments in corporate reporting to those who may not have that technical expertise. And then when you look at the syllabus, it has syllabus references A to E, right? Being able to apply international financial reporting standards, preparing financial statements. Okay, so you see, why did they start with standards? Because standards become like the preliminary, right? What you need before you can do all the other things. Even when you are doing ratios, sometimes there could be impact of the standards on those ratios. I hope everybody is okay. So that is how it literally is. Please, are we all okay? Is it understood? Is it understood?
Yes, yes, sir.
Yeah. So that is it. So you need to know and apply the international financial reporting standards. You need to be able to prepare financial statement notes and extracts for groups that comply with IFRS, meaning you can go to the exam, okay, and they are not going to ask you to calculate, but they are just going to ask you to prepare notes and extracts from group accounts. Usually in our current syllabus or in our current questions that we have for corporate reporting, mostly for question 4B, that is where you get some of these questions. So when I finish, I'll break it down for you. So mostly when you look at consolidated financial statements, question 1, mostly you see that question 1 has 20 marks, right? And then question 4B is supposed to be 25. Now question 4B usually have the rest of that 5 marks, okay? And that 5 marks is where mostly they ask you to prepare extracts for the groups. It could be notes or it could be what? The theoretical framework of consolidation, meaning the questions that they mostly ask you there are maybe factors that constitute control, right? When will control happen, or where will significant influence? When we talk about significant influence, how would it happen? Or they can ask you when you do not have to consolidate a subsidiary. Okay, they can ask you questions on when a parent should not prepare consolidated accounts, factors that evidence significant influence, associate, joint, any theory can be asked here, okay, together with notes and extract. Maybe somebody did a disposal. It's not a full question, right? Just that extracts can be asked. So it pops up a lot. And these things that you see there, a lot of students are not even aware of the syllabus and the things in them. They just go and prepare for the paper, which is a bad approach, right? So you must also evaluate entity position, performance, and prospect using a range of financial and other data. Now, I told you we'll be comparing our two syllabuses, right? Let's look at the old one. You see here, I said what? Using what? A range of financial and other data. Let's check. This one was the 2019 to 2024 one, right? Which is the current one we are going to be examined on. But I told you are going to have a snapshot. So where are we? Copy reporting. Okay. So look at this one. You see nothing changed. If you look at it carefully, it just looks the same. I told you we'll be examining two. I think we need to have it side by side. Let me try and open it with a different PDF reader. Open this one. Different PDF reader. Come in. So that we'll have them side by side. That way it will be easier. I hope my screen is visible, and I hope you are writing something. Please be writing. Not only those doing corporate reporting, for those doing FR2, we also come there. There are some things that we need to understand in the syllabus. That makes it very important. I'm going to corporate reporting. Okay. Can you see my screen? You're supposed to see both screens. Can you see both screens?
No, I see only one.
I hope it's visible now.
Yes. Only one. Only one.
I've shared
The other two
side by
all the
side.
two is. Yeah, all the two is.
Side.
All the two is.
Okay. So when you look at the syllabus, really, look at it. What has changed? Look at A, apply financial reporting standards is still the same, right? B, prepare financial statement, note and extract for groups that comply with IFRS is the same. Evaluate entity position, performance, and prospect using a range of financial and other data. You see it's still the same. Okay. But here lies the case. You should understand that this exam that you are going to write, before you were mostly, the focus was mostly on ratio and comparative analysis. When we say comparative analysis, it means that they can give you 2-year financial statement, they can give you cash flow information, they can give you trend analysis, they can give you horizontal analysis, right? This is a common type of questions that you were expecting. But now, okay, you could even get budget and variance information, right? Budget and variance information, and you have to interpret. Okay, so financial and other data, this data could also be non-financial in nature. maybe staff turnover, right? And you should be able to deal with it. Okay, as an accountant, once you see data, you should be happy. It doesn't matter whether it's financial or non-financial in nature. You just have to be happy, right? You are an information person. And you see, it says advice on specialized transactions. That was still the same. But when you come here, it says assess ethical issues. Assess ethical issues and appropriate ethical responses. You can see this was purely ethics. But now look here. It says what? Advice on what? Environmental, social and governance issues, sustainability reporting, and sustainability standards, and other contemporary issues in accounting and what? Ethics. So you see the difference now. You see here, the focus was mostly on ethics, but here the focus is on what? It's on social and governance issues. You can see. Can you all see? Now, let me show you where they can still examine this environmental, social, and governance issues. Now, when you take every organization, right, when it publishes information in its financial report, it has a section. There's a section for this social and environmental information. Now, if you look in the old syllabus, which is the current one we are going to be examined on, you don't see it there, right? You only see ethical issues and appropriate actions. Yes, but when we go down, you see, it tells us apply international financial reporting standards, right? It says select and apply appropriate accounting standards for private entities, assess the choice of accounting treatment, prepare extract or relevant financial statements based on IFRS, advice on appropriate accounting treatment, okay? Let's keep going down. Evaluate alternative choices of revenue recognition, asset and liability recognition. So most of the time, when you look at corporate reporting very well, when you look at the structure, you realize that most of the questions that are asked are mostly around recognition and measurement. While under FR, they could chip in definitions most of the time and a bit of disclosures. At this level, you are a senior financial executive. And what the syllabus is concerned about is when to recognize or measure something. How does it affect performance? How does it affect position? Do you get it? And explain to a chosen user how to apply IFRS. This is where students lack the requisite information. Knowing what affects who. Okay, if auditors are coming, what are the financial information that will affect them? Maybe if you are doing leases, how does it affect the auditor? How does it affect a particular stakeholder? Students do not really relate, which is very bad because when you look at the framework, which starts everything, you talk about users of the financial statement, right? Now, look here. The B part says what? Be able to prepare financial statement, note and extract for group that comply with IFRS. Okay, so you can identify from a given scenario, a subsidiary, an associate joint venture according to international standards and local regulation. So when you look here, your ability to identify stems from your group structure. So here, group structures are a bit complex, right? So you have a scenario where P acquires S and S acquires SS, right? So P acquires 70% of S. S acquires, let's say, 80% of SS, right? This is a complex group scenario. We call this vertical groups. So if I'm supposed to establish a group structure, I have P here, I have S, I have SS, right? So when I look, who does P have directly? Who does P have a direct interest in? Who did P buy directly?
S.
S. So P has 70% in S, right? And nothing in SS. But when you come indirectly, because I control P, because I control S, anything S controls, I also control my percentage of it, right? Since I have 70, that means NCI has 30. Is that not so? So if I control 70% of 80, that means NCI also controls what? 30% of this 80. Is that not so? And since this guy bought 80, that means there's another NCI who owns 20 in this entity here. Can you see? That's just by the way. Don't worry about this. In class, we'll do all that. So it means that indirectly, I control 70% of that 80%, right? Which means that I control about 56% of this. So that means I have my NCI being 30% here and being 44% here, right? So this is a complex group scenario. And you being able to identify from a scenario, a subsidiary, associate, or joint venture can give you quite a headache. And always, most of the time, this is the reason why students fail consolidation. Sometimes you see an associate and you mistakenly treat it as a subsidiary because you didn't get the numbers right, because there'll be a lot of reclassification. And how does that happen? This is a simple scenario where that can happen, right? So you had they will tell you that you invested in an entity, you were having 18% of this entity. Then somewhere in the notes, you see that you came to buy additional 5% of its shares, meaning that it moved from a trade investment under IFRS 9 to a normal what, associate. Then they will tell you later that you acquired a further 40%, right? So now this is telling you that you have now changed to a subsidiary. So all these things that are happening, there are some impacts that have to be done. With this one, there was no control, so you account for them as if this one is a normal investment under IFRS 9, which could be fair value through profit or loss or fair value through OCI. Then here it becomes an associate. We deal with it under IAS 28. But here, for the first time, we have a subsidiary. And that means we have to reclassify our old investment. This 5% has to change. So this thing alone, they bring a lot of questions on it and they mix it in scenarios. That is why students have a problem. Because this reclassification will result in a gain or loss, and you have to use the new value, which means it will affect your goodwill, and goodwill will also affect your statement of financial position, right? So, and it will affect your retained earnings because the reclassification goes there. So if you forget, your whole thing is going to be wrong. So they examine some of these issues which people are not aware of. They don't really care. All they think about is solving. At your level, at corporate reporting level, consolidated financial statements carry huge marks. 25. It's not small, right? So, 2, you should also prepare consolidated financial statements, right? See, you must be able to prepare P&L, console P&L, console statement of changes in equity. Now, this one, let me put it in a different color. Now, there is no relationship. Let me just. One thing you must understand is that there's no relationship between a console balance sheet and a console P&L, right? Unless there's this statement. And IC has been so good that it doesn't necessarily examine this. Like SEMA always examines this in their advanced reporting and then taxation paper. You always have to prepare statement of changes in equity. But with ICA, they make sure they don't, because this one is a whole thing on its own, right? And a statement of changes in equity for groups, it's not very difficult, but you still have to do consolidated statements. So this is the only statement that links the balance sheet and the P&L. But under no circumstances would you get P&L and financial position and assume a relationship between them. There's no relationship unless there's this statement, which ICA won't ask you to prepare. But in this new syllabus, you are definitely going to prepare this. It could be that maybe this that they'll tell you to prepare a statement of changes in equity, consolidated one. And it looks like the normal one, with the normal statement of changes in equity, it looks like this. So you have, let's say, stated capital also. Then you have retained earnings. You have maybe revaluation surplus also. And then you have your total, right? For the consolidated one, it looks like this. But remember that your reserves will be split. So you are only preparing for the owners of the parent, right? So if I'm doing consolidated statement of changes in equity, what happens is that I can do for the owners of the parent, you can decide to split it, but they will have their stated capital because you are preparing for the owners of the parent, and then maybe the retained earnings, which is your consolidated retained earnings. If there's any other reserve, consolidated reserve, right? Let's say there were other reserves. Okay, then you have a separate section for NCI. Okay, so now NCI will form part of this reserve, and whatever you share for this guy, remember that NCI is also an investor. You must also share for NCI before the total will come. That's how it looks like. And this thing can actually cause a headache anyway, because people are not familiar with it. Don't worry at all. Now, we are still going. It says we should be able to prepare. Every time you see they say prepare extracts, prepare extracts. At your level, extracts are very important, right? Okay, explain with examples. Additional information that may be included in the annual report beyond financial statement in accordance with international best practice and local requirements, including management reports. See, including management reports. Okay. 1, risk information, governance reports, financial summaries, key performance indicators, and highlights. Now, you see what I'm reading? Now, look here very well. How does it link to this part? You see it's linked. True or false? See, in the new syllabus, they said advice on environmental, social, and governance issues, sustainability reporting, sustainability standards, other contemporary issues around accounting and ethics. And when you look here in this syllabus that we are going to be examining before this new one, You see that this same similar thing is there, meaning that it was already in this syllabus, but ICA just decided not to examine. And they like, no, look at it. It's under console B. Prepare what? Financial statement, notes, and extracts for groups. You can see it's there. So they can decide that instead of bringing console theory under question 4B, they'll go and carry environmental standard. Maybe triple bottom line reporting. What is it? Reporting, right? People, profit, people, and planet, or planet, people, and profit, right? The 3 P's. Or C, social reporting, environmental reporting, and economic reporting. It is still in our old syllabus. Just ICA just didn't examine. I'm telling you this because the paper you are going to see, not be easy paper. I'm not going to lie. Do you understand? But these things that you are seeing in the new syllabus, they'll be snapshots. When I say snapshots, you should understand what I mean. Meaning that it will look like, okay, I'm doing a prototype, okay, a prelims of the new syllabus. Does that make sense? I hope that makes sense. So they are telling us that after you have been able to master consolidated statement, you must be able to evaluate position, performance, and prospect using a range of financial and other data. So be able to calculate suitable performance, position, and prospect measures using key performance indicators, financial statement ratios, comparison, trend analysis, and other representation of relationships that support a meaningful financial and business analysis of a private entity. So at your level, you don't do public sector analysis, but you do private sector analysis. Is that okay? And they can ask you for a cool 5 marks, the limitations of ratio analysis, and being able to draw conclusions and report on analysis undertaken from a business perspective. So sometimes, this part is the investigative bits, right? You see, this is the investigative bits, which were still in the syllabus, right? But then ICA was not throwing more light on it because a lot of students do not even know how to apply professional skepticism when it comes to ratios. Okay, all they do is that gross profit has gone down by 10%. This shows that the company is not doing well. What is making the company not doing well? Are you sure the company is not actually doing well? Have you compared it with other ratios? Do you think somebody is doing some manipulation somewhere? Do you think that somebody is under management pressure to not do the right thing? What is the impact on the business? Have you thought about it? Does it lead to a particular risk? What kind of risk is that? What is the impact on the financial statement? Does it affect going concern? You see, these are the things they are looking at. But students do, and please, I'm not only talking about those who are only doing corporate reporting. It applies to every paper because every paper has analysis now, right? So if you are doing it, open your mind. The ratios that you are calculating or the financial statement analysis that you are doing, is it actually what it is supposed to be? What is the relationship with other things on the financial statement? Have you thought about it? Do you understand? I hope I'm making myself clear. So there are particular issues that can be asked. You see that the thing even told you that what? Use key performance indicators. And key performance indicators could either be financial in nature or they could be non-financial in nature. So sometimes you can go and they'll give information like what? Customer data. Okay, customer data, and then they'll ask you to make meaning from this customer data and maybe relate to what? Some branch of a company. How does this customer data affect branch 1, branch 2, and branch 3? And they give you financial information. You should be able to analyze. Tell us something. It doesn't mean that all your answers should be the same, but you should be able to make meaning. So one time like this, they brought discontinued operations in ratios, and a student would be like, oh, ICA has changed the trend. Say, when we couldn't, and I was like, oh God. ICA students and they have changed the trend. They haven't changed any trend. It is there. You just have to know how to go about it, right? In class, we talk about all these things, but sometimes it breaks my heart that students do not learn. Please, this time we are preparing very, very, very well, right? So that you put smiles on your faces. Is that okay? We do our part, you also do your part with more practice. Please, is everybody okay? Can we move? Can we move?
Yes, sir.
So, and also note that anytime you are doing ratio, sometimes they can limit you to the user, okay? So when we say limited to user, it means that they'll tell you that, okay, the ratios that they say prepare, maybe A will tell you that compute liquidity ratios, working capital ratios, or something, and then they'll tell you that, okay, the end user is your creditor, okay? Or sometimes they'll just tell you that prepare ratios suitable to explain to your creditor why you are not doing well. Meaning that for your creditor, what ratios are important? Yes, this is a general question. If I have to prepare ratios to my creditor or my payable, which ratio will be important?
Solvency.
Solvency, one, okay. Which else?
Liquidity.
Liquidity. And why liquidity? You must be able to tell me why liquidity.
Yeah, for the payables or for your creditors to know if you have the liquid cash to settle your liabilities on time using your current assets.
Yes. You get the idea. So some of these ratios, you should know what. And ratios applies to every paper in ICA, not only reporting. Even in management accounting, it is part of performance. Financial performance is a key requirement. Strategic case study, everything is about ratios. Those who are doing case study, everything is about ratios. Whether you are doing gearing, you are doing cash flow statement, everything is about ratios. So I wonder why students do not master ratios. They just have basic interpretation. Sometimes when you look at the max ratios, it has always been 20, 20, 20, 20, sometimes 15, then 5 marks for some theory, right? But one thing I want you guys to understand is when it comes to ratios, you must be very skeptical to check if there's some sort of investigation going on. Do you understand? Do you get it? That is what I want you to focus on. Is it understood? Is it understood by everyone?
Yes.
Yes.
Okay, so when you go to the D part, it tells us that we should advise on specialized transactions, right? So here, when you look at it, it says what? We should have a capital reorganization scheme. Now, this capital reorganization scheme, okay, that's what we call capital reduction or reorganization schemes. Now, note, you have to know all the various kinds, okay? So one, you should be able to design, you see, designing a capital reconstruction scheme, implementing a scheme, and then where we have what, external reconstruction, okay? So basically, there are 4 types of reconstruction that they can ask you. The first one is where you design the scheme yourself, okay? So design a scheme, that's the first type. The second type is where you implement a scheme, okay? So implementation, meaning ICA has created their own scheme for you, and then you are now going to implement the scheme. 3, there's something we call scheme evaluation, which they put as part of implementation, but scheme evaluation means that they have given you their scheme already. Okay, you are going to evaluate whether the company, which is not doing well, should liquidate, or the company should try to turn around, right? Or reconstruct. Okay, that's it. And the last one is external reconstruction. External reconstruction hasn't been examined in a very, very long time, like 2 syllabuses ago. Okay. And the reason why ICA has not examined, I cannot really tell, but external reconstruction looks like partnership. What is done at the lower level. So that is why maybe I think, because when you're doing external reconstruction, you have to open a realization account, just like you do for partnerships, and then you use it to work, right? So for capital reconstruction, gradually they are moving away from it because it's more of a corporate decision. Accountants are not even doing that most of the time. It's business analysts and those things. So gradually it's dying off, but you need to know, at least you need to know it's a corporate decision. But what IC is more concerned about, because IC always wants something you can apply standards. Do you understand? Which you can apply standards. And the best place to apply standards is always business valuation. The best place to apply standards is always what? What did I say? The best place to apply standards is always what?
Business valuation.
Business valuation. And ICA always wants you to do standards, right? This business valuation and capital reduction that you are seeing has some sort of adjustment of profits. And at FR level or the lower level, this is where you see publish accounts. Do you get it? Yeah, so actually when you do business valuation capital reduction, you're actually doing publish account in disguise. Opening a capital reduction account is a P&L and other comprehensive income because all gains and losses goes to that account. Then you prepare a balance sheet. So anything you do in business valuation or capital reduction is still P&L and balance sheet in disguise, right? So that is why you see the same format that is in FR is still in corporate reporting, but you just need to open your eyes. Are we okay? So the E talks about what? Assessing the ethical and professional considerations when undertaking work, not so. Giving advice on financial accounting and reporting issues that may have given rise to ethical problems in business and reporting scenarios. So how best do you deal with ethics? Let's take a simple scenario. And this applies to every paper now, right? No matter the paper you are doing, you are going to face this issue. So for instance, let's see. Let's say this guy is a new accountant. So new accountant, Kofi, right? So I'm just giving a scenario. This Kofi, new accountant. Also, employed by uncle. So one, he's employed by uncle. Okay. Employed by his uncle. First employment after ICA. Okay. He hasn't been employed before. So performance related pay. Okay. Which is some sort of incentive that has been given to him if he can what? Reduce the tax liability. And the company wants to go for loan. Okay. So because of that, he may be, if you want to go for loan, you are enrich your asset position, right? So you can suggest maybe the capitalized, you can tell you that the company capitalized R&D expenditure, right? Just so they can have a rich asset base. So with this scenario like this that you see, right? And now that's how most of your scenarios are going to come. And even if it's a standard question, it has ethical bias inside. There's some sort of ethics hidden, right? Now, look at it. When you look at ethics, no matter the paper you are doing, there's always what? Bias somewhere. And all you have to do is try to avoid that bias. And the question you ask yourself first is that, what is wrong? When I say what is wrong here, I'm first looking at the accounting issue. So my question is, what is going on here? Yes, who can identify the accounting issue here? What is happening? Don't think about ethics first. Think accounting. What is happening? Accounting. What is wrong here? Yes. Did you have a lot to do? It seems people are too quiet. What is wrong? Like, what's happening? What is talking? Capitalize R&D expenditure. Do we capitalize R&D? Under IAS 38? Those who have a little accounting,
No, sir. No, sir.
We don't.
We don't.
So if this guy has done it, that means there's something wrong, right? And what could have made it? That is where you start looking at other factors. See, why did this guy capitalize R&D expenditure? They said they are going for loan. And before you go for loan, don't you need a good asset base? The bank needs to know you have more assets. Could that be the reason they might have capitalized R&D? You see how the thing looks like. Also, wasn't he employed by his uncle? Wasn't he employed by his uncle? Would he want to lose his uncle?
No.
No, this is his first employment. That means he wouldn't want to lose that employment. Do you get it? These are some of the issues you think about. Scenario. Do you understand? So first employment, it is possible this guy may be pressured. There may be a lot of pressure on him. You see how I answer questions? And then now you relate it. As you've identified these issues, you now relate it to what? The fundamental principles and look at which one has been breached. So, okay, he being employed by his uncle, familiarity is there, right? Right? First employment is telling you that there may be some management pressure, right? Management pressure. No, so performance-related pay. I get it.
Independent.
Sizing him. This will not make him objective, and he will want to reduce taxes just to get it because he's a fresh graduate. He wants money, right? He needs to defray ICA costs. So you understand. It's very interesting. And most of the time now, they are basically going to ask you actions to take. So when it comes to these issues, always I use IWA. What is the issue at hand? Why does it matter?
Responses.
The significance and what are the actions to take? And that is what we call the safeguards. You can institute corporate governance. You can train staff. You can do risk assessment. You can put good controls, right? All these things are things you consider in every paper. And you can use the same thing to answer advanced audit questions. It's the same thing. Ethics never changes. Just that when it comes to corporate reporting, there are two types of accountants involved. It's either an accountant in practice or an accountant in employment or industry. An accountant in practice is simply an auditor, right? And an auditor has 6 traits. He will have something we also call a management trait, meaning you are giving or providing strategic advice to management, right? Which is not the job of the auditor. But when you are an accountant in employment, you are part of management, right? So management trait does not affect you. Yours is management pressure or intimidation. And that is the key threat accountants face, even in real life, right? Where you are going for loan and they are pressuring you to manipulate the account, creative accounting, manipulation, right? Over trading. These are symptoms of things that you would mostly be seeing in scenarios. So anytime you're doing ratios and you see some irregular ratio, like the ratio is supposed to be like 1:1, then all of a sudden you are seeing 17:1. It's not real, right? It looks fishy comparing the industry or comparing to the industry average. So you could say there may be a potential ethical implication in your interpretation, and that tells the examiner you know your stuff. I hope that is okay. So that was about corporate reporting, and I didn't talk about the standards you need to know because we will come and look at standards. There's a grade always at the end of the syllabus, and then please show by hand those who are doing financial reporting. If you know you are doing financial reporting, just show by hand.
And please, what are the questions at level 3? If exemption for 1 and 2.
Okay, level 3. You are writing level 3.
Yes, please.
Okay, so level 3, you'll be taking corporate reporting, advanced audit and assurance. You will be taking
Advanced.
taxation, and you'll be taking strategic case study.
Please, come again. Advanced auditing
and assurance.
And assurance.
Then you do advanced taxation.
Advanced
taxation. And strategic case study, which is the last paper. The last and headache.
Strategic stages, yeah.
Strategic case
but
study.
And public sector will be part.
Yes, public sector, because no matter where you come from, maybe you came with an MBA, you still write public sector. So that one is done. Then you add this 4.
Okay, thank you.
So I told those who were writing FR to show by hand, but I only see one hand, only Joseph. Yes. I know some people are taking FR. Yes. Okay. Okay. Now, not to discourage you, but those who are doing FR should be very, very, very serious because FR is unlike before. Very loaded, very, very, very loaded with a lot of tricks, right? So because a lot of people fail corporate reporting, they've seen that the problem is from the FR. The financial reporting knowledge was not enough. Like they didn't learn financial reporting very well. So now, as a stepping stone for you to be good in corporate reporting, FR is very loaded. Yes, because it's like people's basics, like their basis for learning corporate reporting. They spend so much time learning corporate reporting because their FR foundation is quite low. So let's look at some standards which will be required for both courses. Then I'll dive into FR syllabus as well. Then we move to other ones because these ones go together. So when you look at it, they've given you a grade, okay? So this grade, this is what it actually means. Let me show you. So even from here, you can start planning how you plan to learn, right? So 3 means that it's high priority area, right? High priority means high level knowledge is required. You have to know the ins and outs of that standard by heart, right? Then 2 means it's medium priority, right? So you need medium level knowledge. At least know some recognition, measurements, basics, right? Not giddy giddy giddy. But here you need to know everything there is to know, including disclosures, everything. So the ones you see 3, they want you to know that. Then 1 is low priority, right? So that means it's a low priority area. So this grade, it's like people don't even know there's this grade in the syllabus. It helps because you know what standards to focus on and what standards to not focus on. Is it understood? Are we all on point? Can we proceed? Can we proceed? So when you look, the preface to the IFRS, level 1, they don't examine it, what the IFRS is about, harmonization, the various concepts of consistency, understandability, those things, you have to know everywhere it's applied. The conceptual framework, you have to have deep knowledge, though you do not see it directly in the syllabus. The conceptual framework is part of your recognition and measurement criteria. It's part. You need to know the conceptual framework. Without it, you can't do reporting, okay? Then we have presentation of financial statement. At each level, you require deep understanding. The format for financial statement, what are assets, what are liabilities, current assets, current liabilities. From there, you need inventory. Now, because you are just focusing on reporting, inventory, you require high knowledge. And high knowledge means that the measurement, recognition of inventory, right? Even using valuation bases like FIFO, APFO, okay? LIFO is not allowed. It's only allowed under SSAP 42 and 2. That's UK standard, but in IFRS, LIFO is not allowed. The reason is because LIFO mostly understates profits, right? So tax, to align with tax regulations worldwide, they exempted LIFO, okay? Because when you use LIFO, there's a potential tax implication that you are bypassing tax laws. So they ban LIFO. So we do not use last in, first out. So those are the measurement basis for inventory. So with inventory, we measure it at lower of cost and fair value less cost to sell, which you used to call NRV, right? So inventory, you require very high knowledge at this level. Then statement of cash flows at the lower level is so basic, but at your level, it will be mixed with standards, right? And you know, activities, you have cash flow from 3 activities, from operations, from investments or investing, and from financing. You put all together, compared to your opening cash flows, get your closing cash flows. Then we have what? Cash flow statement mostly do not feature. It's part of your exam, but most of the time they don't bring it. I don't know why, but it comes once in a blue moon, okay? But then you should know it very well because you require cash. Cash is the lifeblood of business. So this time I think cash flow will be popping up a lot. Just be ready for it. Then this is one standard which people mostly underrate. This is a standard that every accountant everywhere should even take serious than other ones, because accounting policies map how you do your things in your organization. You know that even tax-wise, some things are there. You choose your own materiality. You choose the way you do your things, and the tax law has no say. It says it should go in line with generally accepted accounting principles. Do you understand what I'm saying? So accounting policies are a key standard, no matter where you are, whether you're in level 1, level 2, or level 3. You see that level 1, because they don't want to pressure people, they can't learn into detail. But at level 2 and level 3, whether you're doing financial reporting or corporate reporting, you require high level knowledge, meaning IAS 8 is a high priority standard. Okay, after that, I'll summarize some standards that at least if you have control over, there's no way you are failing corporate reporting, right? Okay, so I think that one, I'll give it to you somewhere. Okay, when class starts officially. So IAS 10 events after reporting period, you require high knowledge, right? But mostly at corporate reporting, they feel like, okay, once a while they can chip it in some standard question with other standards, but it doesn't come on its own. But at corporate financial reporting level, this standard can come on its own. Then income tax. Income tax, what we do in financial reporting, which people are even scared of, is even the surface. Everything on the financial statement has a tax implication. We have something we call deferred tax. Okay, so at corporate reporting level, let me say at financial reporting level, right? What you'll be learning income tax is basically what? Income taxes, the normal current tax. Okay, you are going to learn current tax. Current tax is a normal liability. Debit to create an expense, credit to create a liability, right? On the financial statement. This one is basic. Then a bit of VAT for financial statements. This one is done at level 1, but what you do is that VAT accounting, the basic VAT accounting went to account for VAT. The reason is because sometimes as part of published account, they will include VAT in revenue or expenses. Then you go and take it out and treat it as a liability. So this thing happens. But at the FR level, the deferred tax is so basic that they only focus on deferred tax for non-current assets, okay? They do not bring deferred tax for liabilities. Remember, you can have a deferred tax asset and deferred tax liability, right? For non-current assets, mostly, you are going to get deferred tax liability because of a taxable temporary difference. Don't worry if I'm using terms which you are not familiar with, but that is the way the standard is. So everything that happens has a tax implication. So far as there's a movement on that account, there's going to be a tax implication. If you sell an asset, are you getting it? Or if an asset goes up in value, the tax law does not recognize any revaluation gain, right? But the accounting realizes that gain. Because of that, there will be a difference in the tax treatment and the accounting treatment, causing something we call a temporary difference. And this temporary difference is just because of the differences in treatment between tax and accounting. And what happens is that maybe in the future, when the asset is actually sold, are you getting it? That gain would actually be realized. But we are not in the future yet, right? So we create a provision now, meaning that that tax which is deferred in the future, we are capturing it now to smoothen our financial statement. And that is what we call deferred tax. So it will only be reversed if that transaction actually happens. You are telling me that I have this building, it is 35 million. Now on the market, they sell the building for 37 million, right? Tax-wise, what will we recognize? We recognize the same 35 million, right? But accounting-wise, you recognize 37. But the thing is, you see that the accounting figure is now more than the tax figure. Okay, now if I sell the building later, that is when I'll recognize the 2 million gain tax-wise. But accounting has already recognized it, so it will cause a difference. That is what we call a temporary difference. So we tax it and treat it as a tax which we are likely to enjoy, a benefit which we are likely to enjoy. Are you getting it? Because that is a gain to us. Okay, but again, remember, any gain or profit from business, employment, or investment is subject to tax per Ghanaian tax laws. Okay, IAS 12 is one of the standards that are a bit jurisdictional. It means that even though you are doing IAS 12, which is international standard, it still links to your tax laws in a particular country, because to get your current tax, you still need to do the same adjustment you do under our Ghanaian tax law. Okay, so that's just a bit. So under corporate reporting level, you need deep knowledge, okay, into the things that I'm saying, even liabilities, net assets, all these things have tax implications, especially something we call share-based payments. They are going to ask you consolidation and deferred tax implications on consolidation. It only affects your net asset at acquisition. Okay, so there are some things, because sometimes remember, all taxes are basically provisions. They are liabilities. Then we have PPE. PPE at your level won't come directly as PPE, but it may be mixed as part of other standards. Okay, sometimes when you are lucky, please give us the standards that are important for CR. That's what I'm giving you. You see some standards, I talk a lot about them. Some I do not talk a lot about them, so you should understand, right? So for PPE, non-current asset, remember, if you're a very smart student, you realize that all you need to be a master of is to be a master at preparing carrying amount or carrying value. Do you know why? Because every standard that involves asset will have some carrying value. IAS 16, you calculate carrying amount, right? Which is cost minus what? Accumulated depreciation and any accumulated impairment losses. But for now, let's just end here, right? IAS 16, you require carrying amount. IAS 38, you require carrying amount. IAS 40, carrying amount. IAS 20, carrying amount. IAS 36, carrying amount. IFRS 15, I say 15, 16, listen, you by all means need carrying amount. What else? IFRS 5. You by all means need carrying amount. So if you know carrying amount, you know half of the game. Okay, this has always been a thing. IAS 23, borrowing cost, you require carrying amount. So at corporate reporting level, just know it as what? Non-current assets. I prefer you know it that way, because if you know it that way, then it doesn't matter what they give you, you are able to maneuver your way through. Sometimes they can even bring a question you are not familiar with, but immediately you see cost, you see information to calculate depreciation, there should be a smile on your face, because definitely you can get marks for that. I hope we are all following. Are we on point? Are we on point? Okay. So from there, a standard that is primarily a corporate reporting standard, you can see. I get it. Revenue. You see here is IAS 18 revenue. Yes, now IAS 18 is not functional again. You could say it is repealed. But then there are some things which are important in IAS 18 still, which is revenue from sale of goods and revenue from what? Rendering of services. Because of something we call stage or percentage of completion. These things, though we are no longer applying IAS 18 revenue, they are still relevant, because as and when you can recognize goods is important, and as and when you can recognize service, we still use it, despite they changing it to IFRS 15. IFRS 15 just talks about what? The 5-step procedure, and also gives us various scenarios. So you must be able to identify the contract, what are the obligations under the contract, what is the price of the transaction, how do you allocate the transaction price, including where there's some discounts, or there are some bonuses, and how do you recognize revenue? Okay, so this is a 5-step criteria that mostly under FR, this is what they focus on. But under corporate reporting, you need to know the components of each of these 5 steps of revenue recognition. Okay, so it's a very important, and almost every diet it shows up. Okay, almost every diet. You need substantial knowledge in revenue. Anything that mostly shows up on the financial statement, the basic financial statement, is always a requirement. Okay, so we have employee benefits, which is a key standard for corporate reporting. This one is a key standard. So all the key standards, let me help you out. Okay, I'll put this in blue. Revenue, I'll put it in the same color. Accounting policy. Okay, I'll put it in that color. Government grants. Government grant is also a corporate reporting standard. This one too. Okay. Then you see it has high knowledge. Borrowing costs, yes, but it will be mixed up of a question. This one is a corporate reporting standard. Okay. Accountant reporting by retirement benefit plan. You need low knowledge on it. Though it can come by some one or two marks. Don't worry yourself. Separate financial statement, yes. But this one, there's nothing under this standard. So I don't even know why people learn it. IS 28 in associates. Hyperinflationary economies. Don't worry yourself. Financial instruments. Everything about financial instruments, earnings per share, interim financial reporting. These ones are, what do we call it? Interim financial reporting and earnings per share. They are disclosure standards. You need to know them. Earnings per share is actually a performance standard, but we mostly link it to disclosure too. Impairment, every diet, ICA, whether I like it or not, every diet you see impairment there. Provisions, cool. Intangible assets, yes. Anything about financial instruments, very important. Investment property, yes. Agriculture, yes, but not that much. First-time adoption, this ones, they are all theory. Share-based payment, corporate reporting standard. Let me deepen it, right? Business combination, corporate reporting standard. Insurance contract, forget about it. IFRS 5, non-current asset held for sale, corporate reporting standard. That's why I deepen it. Exploration for and evaluation of mineral resources, don't worry yourself so much. It doesn't mean it won't be examined. Low knowledge. So spend your time on the ones that can give you more marks. Anything financial instruments, I told you, very important. Operating segment, yes, corporate reporting standard, but it's part of FR2 as part of performance reporting, right? Knowing the chief financial decision maker and all that, right? So you should know that. Then I told you anything about financial instruments is very important. Consolidated financial statement, joint arrangement, anything about console, very important, right? This one's fair value measurement is also there, but I wouldn't place much importance that much, okay? Revenue from contract with customers, yes. You see some of them, I don't even highlight them, meaning that you don't have to waste your time so much. IFRS 16 for leases and IFRS for SMEs, corporate reporting standards. So if you actually look, when you move from FRA, these are the standards that come in corporate reporting for the first time. IAS 19 for the first time, this is where you do long-term employee benefits, right? Most of the time we do not have this. Then we have think IFRS 16, IFRS 15, though they are in financial reporting, but here is detailed. Okay, you have share-based payment, IFRS 2, you have IAS 21, you have IAS 24, okay, IAS 33, earnings per share, you have IAS 20, you have IFRS 5, you have IAS 38, IAS 8, IAS 37. Okay, so when it comes to corporate reporting, these are magic or most important, one of the most important standards that at least when you know these ones, I forgot our friend IAS 12, at least when you know these standards, I think you should be a little fine, right? You should be a little fine when you are doing corporate reporting. But for those doing financial reporting, the focus is mostly on non-current assets. So corporate financial reporting like this, the most important standards are still here. So financial reporting, IAS 16, 40, 38, 20, IFRS 5. Okay, IFRS 5 and 36, they are very important because at the senior executive level, that is what we mostly think about. We are looking at whether our assets have been impaired, what is the implication on our annual reports. That's what we do at the board level, actually. That's why those ones are very important, right? So at this level, that is it. Then when you come here, we have the ones that are related, IAS 8, 37, 10, okay? And IFRS 16, did I bring that one? Yeah, IFRS 16, 8, 37, 10. So when you, and maybe inventory is the least, but at corporate report, financial reporting level, these are the standards that at least when you have control over, you should be fine. You should be fine. Okay, so that was about it. Who has any question for me before I move? Any question before I move? Any question before I move? Hmm? Okay. So nobody has a question for me. Wow. Okay, so advanced audit and assurance. So when it comes to advanced audit and assurance, what do you need to know? Okay, when you look at this, I think here the syllabus reference, look at it carefully. In this syllabus, we had ethical and legal issues, accepting and managing engagement for 10 marks, engagement plan for 10 marks, audit and assurance methods to gather evidence, 25 marks. We had concluding and reporting on an engagement, 25 marks. We have statutory role of government external audit and public sector, public accountability, 10 marks. We have public sector audits, 10 marks. And contemporary issues like current issues, transnational audit, extensible business related language, professional skepticism. You see, these are all new or latest issues in advanced audit, right? Now, when you look at these issues, you see how the syllabus is spread. If you're a very smart student, you can at least master this area. Procedures, audit procedures, and how to report, right? So I always tell people that anytime you are doing an audit procedures always have a way. Anytime you identify one particular evidence, you always have to look at the source of the evidence. Where is the source coming from, right? So where is the source of the evidence? How do you test it? The method to test it, right? The method or the technique to test it. And that is what? Whether you are doing recomputation, inquiry, confirmation, analytical procedure, reperformance, inspection, or observation, then why are you doing it? And that is the purpose. Why are you doing this? Okay. And the why is where you use your management assertions, which are what? Beliefs you have come to make about your financial statement regarding certain transactions or objectives that the financial statement you want to achieve. For instance, when I take something like cutoff, are all the transactions that I've recorded within the specified accounting period? If I take completeness, if I take something directly from an invoice, has it been recorded through from an invoice to the day books? Are you getting? Has it gone through the full accounting cycle to the what? To the ledger, to the financial statement? That is completeness, right? And I can check occurrence, whether this thing in the financial statement has actually got an invoice or a receipt. Also, this is how we come up with audit procedures, right? And there's a general audit procedure I always use, right? If you want to do anything, you request a particular schedule or make the whole schedule yourself. You check internal control system, whether it's effective or efficient. You test cast the schedule, check for arithmetical accuracy, take a sample, vouch the sample. You can do all these things, right? Then you check whether disclosure and presentation are appropriate and accurate. Okay, so there's always a shortcut to doing whatever you want to do. So I told you, procedure gathering and concluding and reporting have huge marks. If you're a very smart student, you will master those ones and use the rest as what? As a point to buttress yourself, right? But you cannot go without ethical and legal issues, because even though you see all these areas there, they can still add these ethical and legal issues to them. Are we okay? Yeah. So, what does it say? It says we should be able to evaluate and advise on ethical and legal issues for specified audit and assurance engagement. And here, you are mostly going to be asked questions around ethical and professional issues. So when it comes to ethical issues, they are what you have to know. When you come to professional issues, they are what you have to know. Okay, so ethical issues, most of the time, you are going to be learning about the ethical threats. Okay, so you will be having issues around ethical threats and then the principles, right? Whether they have been breached, what caused the person to breach the threat, whether the client is having integrity, right? So integrity of client. Is the client trying to hide something? Okay. Is the client trying to hide something? You are going to have some conflict of interest, right? You're going to have some conflict of interest. Okay. Those are the things that most of the time you should be looking out for. Most of the time, these are the things that you are likely to spot in scenarios, right? Ethics, and then particularly some safeguards. Sometimes questions only come on safeguards, right? So these are the issues that most of the time you should be looking at. When it comes to professional issues, we are looking at anything which you think is professional. Are you getting it? That should be drawn to the attention of the examiner. Okay, so it's not limited. I can even spot fraud. I can even spot embezzlement. It's a professional issue. Okay, I can spot tax evasion. It's a professional issue. But there are some ones which are easy to identify, like money laundering clues. When you spot money laundering issues in a scenario, it's a professional issue. Now, one thing I tell students is that in exam, if you like, don't break them into professional and ethical. You may get confused. So once you identify the issue, just write about it, right? Why is it important? What is its significance on the audit, right? Remember, all these things you see, you are going to look at how it impacts on the audit. That's what is important, right? So you have things like practice management, and mostly around ethics. When it comes to practice management, they are going to ask you questions around tendering, lowballing, how to accept a client, probably quality control, right? Let me separate quality control, because most ethical issues are around quality control, right? You didn't exercise good quality around the audit work. Supervisor who is supposed to come is chilling with his girlfriend somewhere, and he has let the juniors go to the field. So some of these issues, and also the impact on the audit report, right? So the impact on the audit report, these are some of the issues that when we talk about ethical and professional issues, you get questions on. And there's no quality control question or practice management question without ethics itself, because even as part of accepting an audit, work, you still need to look at ethical issues and even the integrity of clients, right? Whether the client is not hiding something from you, and that could be money laundering issues. Maybe he doesn't keep a proper record. He's doing tax evasion and tax avoidance, right? So when you're able to do this, you must always be able to make judgments, especially relating to an ethical matter. And just like the one we saw earlier, the same thing can still be applied here. Okay, so when it comes to advanced audit, this is one area they are going to ask you questions on, right? The second area is where you are going to be accepting engagement, right? So the next area is acceptance of engagement, right? So acceptance of engagement would mostly involve potential issues, right? If I'm accepting a client, what do I have to look at? When I'm tendering for an audit contract, what do I have to look for? And these areas, most of the time, they are theoretical, unless they give you an audit that was accepted and then something went wrong, meaning quality control issues are going to be prevalent in that particular scenario. Do you get it? So that's why I'm telling you that it doesn't matter what question they bring. You just have to assess all the preliminaries, the things that they've given you, and identify whether they relate to the scenario. Are we okay? So you can see from here, it says what? Evaluate a specified audit and assurance engagement, prepare an engagement plan, right? So here you are looking at assessing. So your staff resourcing, right? Do you have enough resources? Do you have the experience? Quality control. You see, this thing is a key requirement. And because of this new syllabus, you are going to get a prelims. I told you that everything is prelims, right? You are going to get a prelims, but some of them, because the new syllabus has not been issued, you are just going to get a soft part of it. But from next date, that is where you start looking at something like the task force on climate-related financial disclosures, and you get a lot of theory. So those doing corporate reporting next day, like in November, at least they have a chance because some theories will be coming for the first time. They will not make it so practical. The practicalities will be more around the ethics and the standards. Most of them will be matched, right? But when it comes to just your theory about this role of these regulators and those things, yes, you just have to at least know them and look at them. So when you look at this, you can see that now the syllabus has been broken, it has been extended. Ethical and legal issues is 10 marks, engagement plans, 10 marks, audit and assurance methods to gather evidence. You see, always evidence and reporting are the ones that carry the marks. Have you noticed? Evidence and reporting carry the marks, but now they've given a whole section to public sector corporate governance and governance overall, right? And then public sector audits are on their own term, then contemporary issues. So it's not so far from what we already had here, right? But now they've taken 5 from here and 5 from here, and they've given it to corporate governance. Can you see? Can you see? Can you see?
Yes. Yes, yes.
So now corporate governance, as you know, is on its own under audit, meaning you learn everything about board committees, you learn everything about corporate governance, Bank of Ghana, corporate governance, auditing, audit service, you learn all those things. Okay, and that's the only difference. So as I was telling you, when it comes to first doing ethics, you come to engagement or practice management, right? The use of internal audit, which is also a key issue. I get in it. And use of specialists, the monitoring procedures to ensure efficient management of the engagement. Then most of the time, you evaluate the considerations for risk, right? Before accepting an engagement, what risk are you going to face? Then how engagement terms can be agreed and recorded by the auditor, including those, I get in it, with the client and those imposed by laws and regulations. So these things, as you see them now, they are actually questions which you have to find answers to. If you are able to find answers to this, I think you have a chance of passing. Then when you are going to start, right, you are also going to look at planning and audit. When you are planning an audit, there are key issues, right? Audit planning itself, planning within the firm, you have to know everything about audit planning, and audit planning, mostly you have issues around risk assessment and materiality decisions. And risk, your syllabus will be looking at either business risks or audit risks, right? So you can get a question that will ask you both audit risk and business risk, but it's mostly unlikely. If they're asking audit risk, they are asking audit risk. If they are asking for business risk, they are asking for business risk. And business risk, most of the time, you are either using, you can use PESTLE to identify them. You can use whatever model, SWOT, 5 forces. They are all models because anything that will not allow you to achieve your business objectives is a risk. Okay, so you can use these models to identify business risks from a scenario. But business risk could be what? Operational risks, okay, something with your operations. It could be what? Compliance risk, you're not complying with laws and regulations, and it could be financial risk, right? Okay, so there could be potential risk. This is in accordance with the 10-book classification, right? But you can look at risk either internal or external. It doesn't matter how you identify it in a scenario. But what is important for the examiner is you telling us the impacts of that risk, how that risk affects your financial. Are we okay? Affects the business, because definitely business risks, remember, business risks cause 2 things in audit. 1, they are potential inherent risk, meaning they are attached to the business if it is something that could be inherent. And 2, if this business continues and you do not get your cash flows, what happens? The going concern problem happens, right? You see how it works. So this is it. But when it comes to audit risks, you are not going to see it as you see it as inherent risk, control risk, or detection risk, but you are going to see them as financial statement risk, which we call risk of material misstatement. So generally, audit risk is a product of risk of material misstatement and detection risk. So this risk is anything that will cause a misstatement or a financial statement, which is a potential understatement or potential overstatement of some sort, right? The detection risk is a risk that you will use either wrong procedures or wrong sampling, and because of that, you couldn't identify something that was happening, right? And most of the time, around audit risk, you always need to calculate materiality if there's a calculation to be done. It is always like that. If you're able to do this, trust me, your chances of passing are high. Then the next area is the areas that mostly require a lot of theory, like internal control assessment, including IT control. Sometimes they can bring a scenario where you have to assess the IT controls, but most of the time it comes as theory. Then reliance on internal audit specialists and other specialists and the work of other auditors, right? Like subcontracting and second opinions. Then computer-assisted audit techniques, okay, use of client data, information and report, test of control, substantive procedures, which is the audit testing itself, including analytical procedures, which is use of ratio analysis. Now, students are not so good with this, so I'm just telling you, when it comes to analytical procedures, you are going to mostly examine trends. So when I say trends, mostly you are going to do year-on-year comparison if they give you financial statements. You are going to calculate ratios, okay? And here you don't just calculate the ratios. Sometimes the examiner may be fair to you, just calculate the ratios, but if you are able to calculate the ratios, tell us how it impacts the financial statements, okay? What is the potential risk that is happening? That's the main reason why you do analytical procedure, and what can you deduce from it, right? How does it impact the audit, right? This is it. So when you are doing this, you say current ratio seems to have gone up from what? One, maybe from 3 is to what? 3 is to 1 to maybe 3.5 is to 1, right? Then you tell us, why do you think this has happened? Okay. And what is the impact on the audits? Okay, that is how this works. Okay, so sometimes the examiner will require you, this thing might have gone up. Maybe they recognize, it's because they recognize this provision. That is why this is going up. Okay, and this provision shouldn't have been recognized in accordance with the IES. Even if you are not so strong with standards, at least tell them something, right? You're an accountant. That is what you are. You don't have to finish the course before you become an accountant. You already are an accountant, right? So apart from that, you have what? Audit and assurance engagement for social and sustainability reports, which now under corporate reporting, you'll be seeing some of these things in there. Okay, so from there, you have specific engagement, which now it could be a private sector engagement, a public sector engagement, it could be due diligence assignment, forensics, it could be anything, but just know that audit procedures are always similar. It doesn't matter the engagement, but students want to learn standards for each of them. No, they are the same, they are similar. Just that when it comes to something like due diligence, we mostly rely on analytical procedure and inquiry. So you should know specific techniques that are particular to specific engagement. Do you get it? So after that, you are going to look at government audit, government accountability. Okay, public sector audit, if you're a very smart student, as part of this 2020, public sector audits, just know about the public accountability. It's in public sector. That area is theory. Actually, maybe they'll give you a simple scenario about what some auditor did, and then they're going to ask you what potential disclosures or what potential issues should we identify, right? And now you'll be looking at more of the international public sector standards on auditing too. Okay, they bring it a lot. So just look at the past questions, look at the trend for the past questions, because these questions, most of them, they are repeated, especially the public sector standards area, right? Then the last one is what? Contemporary issues. So yeah, what are some recent things that are happening in auditing, social and environmental audit? They pop up money laundering. We talked about it under ethics. I get it. How do you develop auditing standards? It has popped up quite a number of times. Case study on international and national issues, audit monitoring unit of ICA, the role of regulators, Commission and National Pensions Authority. I get all these things. You just need to know them, right? So that was it. for advanced audit. Now we go to advanced taxation. We go to advanced taxation. If you have any question, you can ask me before I proceed to advanced taxation. Yes. It should have been an interactive question, interactive session, but people have been very quiet. Yes. It's time for advanced taxation before finally I look at case study and then we call it a day for level 3 students. Oh, no question for me. Okay. But I hope you can hear me.
Yes, sir, we can hear you.
Yeah.
So advanced taxation, the syllabus is broken into 3. 1 is tax planning. Okay. 1 is tax planning, and tax planning constitutes 60 marks of your syllabus. 2 is computation of corporate tax liabilities. Okay. Corporate tax liabilities. Corporate tax liabilities constitute 30 marks of your syllabus. And then 3 is communication with tax authorities. So communication, which is basically administration, tax administration, and ethics, right? Tax administration and ethics. And that covers 10 marks. So we have how many marks now? 100 marks. Is that not so? Okay. Now, let's break it up. First, let's look at tax planning. What tax planning entails at your level and what you are required to know. The first area around tax planning is domestic tax planning. Okay? So you are going to have to know everything about domestic tax planning, and domestic tax planning will be your first 20 marks. And here, what do you have to know? Under domestic tax planning, you have to know about tax planning, objectives of tax planning, areas of tax planning. The areas could be either exemptions, either it's a tax exemption, tax relief, tax deduction, a tax concession, or tax holiday, okay? Or it could be a tax rebate, okay? So these are areas that tax planning covers. Apart from that, you look at other strategies that people use for tax planning, right? Strategies for tax planning. Then look at tax evasion and tax avoidance, right? Then you look at tax evasion and avoidance schemes, okay? So schemes for evasion and avoidance. There are some schemes that people use. Okay, once you are able to do this one, you are going to look at something we call anti-avoidance provisions, right? So anti-avoidance provisions, they are very key for your paper because they cut across every paper. This is where you are going to learn general anti-avoidance rules, like think after like Section 34 and Section 19 of the Revenue Administration Act. Then you are going to learn what specific anti-avoidance rules, like think capitalization. I get to it. Then you learn mergers and acquisitions or changes in ownership. It's part of anti-avoidance, but I just separate it, right? So once you are able to do this, you learn what we call the variables of tax planning. Okay, those are factors that make tax planning possible, right? So once you're able to cover this one, then I know that when it comes to domestic tax planning, you know it very well, right? These are the areas around domestic tax planning. Are we okay? Can we proceed?
Yes, can proceed.
Okay. So now that we've seen that, the next area will have to do with tax incentives, right? The next area will have to do with tax incentives in the Ghanaian tax law, okay? Which is the next 20. So this one will have incentives that require some sort of approval, okay? And incentives that do not. So here you are going to learn about what? Free zones, okay? Require some approval, some sort of approval or license. we require information about Ghana Investment Promotion Center, one district, one factory. Okay, there are some incentives that when you apply to the ministry, they are going to consider. Okay, then apart from that, so there may be some reliefs around COVID-19. Still, people get COVID-19 reliefs, right? Then other exemptions like exemptions for withholding taxes, exemption by the Ministry of Finance or Parliament, right? These ones require approval. They must approve before you enjoy these incentives under the law. The ones that do not require approval are the ones that the law provides, right? And these ones are the general tax holidays. Okay, so we have some tax holidays that we enjoy. We have some locational incentives. Okay, so you have locational incentives that you are going to enjoy. And locational incentives you could have for free zones, though you've looked at free zones. You have for young entrepreneurs. You have for post-concession. Okay, after the concession for agriculture or farming and then agro-processing businesses, they get some locational incentives, right? Then for manufacturing companies in Ghana, these also have some locational incentives, right? So once you are able to look at these ones, you are now going to look at what reduced tax rates. So there are some reduced tax rates that people enjoy, okay? Reduced tax rates that some companies enjoy. These are all incentives that you enjoy under the law. Then we have some other incentives too. Other incentives that you enjoy because of the nature of your business. So once you know tax incentives, I believe you should be fine because every question that will come will have something around this. Okay, whether you like it or not, there'll be something on tax incentives. Then the third area, which is the next area, is international tax planning, right? So even under international tax planning under ICA, it's not international tax planning. It's just theory most of the time, but gradually they are changing. I see that now they bring issues of residence and other things where you have to think, plan. So with international tax planning, that is the next area I consider. Okay, I get it. That will be your next 20, making 60, right? So with this one, what do we have to know there? What do we have to know there? So here, you need to know the issues of residents and non-residents, right? You have to know this very. You have to know double taxation and its issues. So double taxation, what is it? What is it? You have to know the types of double taxation, the causes of double taxation, the disadvantages of double taxation, right? You have to know them. Then examples too, because when you look at the types, you have to look at examples of these types. Then the next area you have to look at is relief from double taxation. How do we relieve people from double taxation? Relief from double taxation. This thing requires some calculations. We'll look at all of them in class. And within the shortest period, we would have covered all this. Okay, we look at the calculation, the meaning, how to get reliefs, causes, I getting it, of this reliefs and all that. Then once you know this, you have to now look at how to get relief using double taxation agreements, right? So double tax agreements are a key issue. So when you know DTAs, especially what they are, their advantages, the objectives, the principle that DTAs override the domestic law, right? Which we cover under section 98(1) of the Revenue Administration Act. Okay, so these ones you have to know them anyhow. Then you are going to look at entitlement to treaty benefits. Okay, so if you want to enjoy any benefits under a tax treaty or a DTA, what do you have to know, right? Apart from that, you have to know model tax conventions, what they are. Okay, so once you know this area, the next issue, which is still under this one, will be the issue of permanent establishments. Okay, so you have to know everything about permanent establishments. So let me put it in capitals. So permanent establishments. You have to know everything about permanent establishments under the Ghanaian tax law. So we make reference to section 107, 108, 109, 110, and a bit of 111. Okay, so This covers permanent establishment. And then Article 5 of the DTAs in the Model Tax Conventions too. Then finally, as part of international tax planning, you need transfer pricing. Okay, so for ICA purposes, transfer pricing, you just focus on your section 31 of the Income Tax Act and the guide, the transfer pricing regulation LI 2412 legislative instrument 2412. And these ones are what you need for transfer pricing. However, there's link to the OECD transfer pricing guidelines, which is what birthed this one, right? So this is the kin to transfer pricing. So literally, you see, everything about your syllabus is tax planning, domestic tax planning, tax incentives, international tax planning. If you know this area, you have 60 marks on your fingertips. What did I say? You have how many marks on your fingertips? How many marks on your fingertips?
60.
0.
Any questions so far? We can proceed.
Prof, can I see the starting, the tax incentive side? I want to.
Okay. You know, Parliament is the only body that can waive or vary taxes in Ghana, right? So that is also an exemption that requires an approval. Okay, so remember, they are all incentives. You do not see this the categorization anyway. I categorize it like this, okay? So that it makes more sense to the student. Okay, any question? You are not asking questions, so I don't like it that way.
We will ask questions when we start the classes.
Our class is starting on Monday, effectively. Monday, strategic case study.
So that's where we start asking our pertinent questions.
Sure. I'll be expecting that. For me, I like questions a lot.
Yes, sir. Yes.
Okay, sure. Please, are you okay now? Can we move? So are we okay with the international tax planning? So what's the second section? I said the second section talks about what? Computation of corporate what? Corporate tax liabilities. How many marks was that? How many marks was that?
65 marks.
I said that is 30. The first part was 60. I gave you 60, 20, 20, 20, right? So this was 60. So this is now 30, right? So what do we have to know here? Here we have to know how to do taxation of sole proprietors, right? You have to know how to tax sole proprietors. Okay. You have to learn how to tax companies. So companies, and mostly here, companies, you'll be getting questions around manufacturing companies, and then what do we call it? Merchandise companies, right? So apart from that, you're also going to learn how to compute for trusts and exempt entities. And exempt entities here, mostly the focus is on NGOs, right? Charities. Mostly the focus is on NGOs. Then you have to look at corporate financing, right? Corporate financing, which is part of tax planning though, right? It's part of tax planning, but I decided to put it here because we are looking at corporate tax liability. So corporate financing, and then an entity choices, right? Looking at the type of entity you should go into to get the best tax exposure. It's part of corporate tax. Then finally, we look at how to tax mineral operations. So mineral operations, and then finally, we look at how to tax petroleum operations. Okay, though the specialized entities also include insurance and banking, right? Because the new syllabus has it, and it was already in this old syllabus, but it was never examined, you may not know. So let me just include it here, because in class, I will still teach insurance and banking no matter what, because I don't want to take chances. I hope that makes sense. It was there, but they never examined it. It was actually in the syllabus, but they never examined it. Are we okay? Have you written it down? So these are the areas that require the 30 marks that you need. Any questions so far? Any questions so far? Any questions so far? Okay, that's fine. Let us proceed. Okay, so that was the second session. And then we go to section 3. Let me change the color. Now we go to section 3. And section 3 has to do with the tax administration and the ethics side, right? And here, what you have to know first is when it comes to tax administration, basically anything, but most of the time, they are going to be asking you about the legal rules like maintaining documents. So maintenance of documents, which can be found under section 27 of the Revenue Administration Act. We are going to look at administration of the tax laws, okay? So section 1, 2, 3, 4, and 5, right? Which includes assistance of experts and all that. We are going to learn official secrecy. About official secrecy, section 7. Okay, so filing of returns is a method or a way of communicating. Filing of returns. We're going to look at assessments, payment of taxes, and refunds. Then recovery of taxes from a taxpayer. Recovery of taxes from a taxpayer. Then we have practice notes and rulings. Then we're going to learn issues around what a tax audit is. So tax audit and compliance checks. Tax audit and compliance checks. Then how to raise tax objections, right? So these areas, you have to know them. These are mostly the areas that are going to ask you questions. But when it comes to ethics, ethics is relatively new. It has been examined only 2 times in the ICA syllabus, but definitely the principles of ethics, the fundamental principles, right? The ethical theories, mostly the ICA ethical theories, they are not being fair, right? So ethical theories like the consequential ethics, non-consequential ethics, or deontology and then teleology, right? Those questions they can ask you absolutism, relativism, but nobody will bother himself where you have professional behavior, integrity, confidentiality, competence, and due care and objectivity. Then the ethical threats, okay, the threats, safeguards for a tax accountant. Okay, what are some of the safeguards? Like decline or seek legal advice. You can decline a tax audit engagement or a tax engagement or seek legal advice or report to the authorities, right? They are all there. Then the consequences of unethical behavior, right? So when it comes to ethics and administration, these are the areas. But apart from that, there's also tax advice, right? You can ask a question on tax advice. And tax advice, it starts with section 18 of the Revenue Administration Act and section 19, right? Apart from that, you just with what you have here, they can just ask you a question and then you are just going to use it to what? Advise your client. Okay, so this area is 10 marks, but a lot of things are there. Now, the last area I'll talk about is what? Professional communication, right? Which is the last part of your syllabus. When we talk about professional communication has to cover how to write letters, okay, memos, Okay, letters, memos, reports, briefing paper or briefing notes. Okay, briefing paper or briefing notes, advice, presentation, outline. Okay, and any type of document. As a student, you must know how to prepare all these documents, right? You must know how to prepare all of them. And that brings us to the end of the advanced taxation syllabus. You see how broad it is. If you have any question, I'm open. Before we go to strategic case study. Strategic case study. Before we go to strategic case study. No question. Wow. So can we proceed? Proceed, you bet me proceed, Anna. Eh?
Yes, sir.
Yes, sir.
Yes,
You can
sir.
proceed.
So advanced tax, are we okay? Are we okay with advanced tax?
Yes.
Now, for strategic case study, let me see by hands those who are doing strategic case study. Let me see by hands those who are doing strategic case study. So, I just want to give you some advice. I just want to give you some advice before you set the paper. Please and please and please, right? As a way to help everyone, make sure that all the past questions that have come, you have downloaded all of them, and you go through every one of them before you set the paper. Please, what did I say?
So we should go through all the past questions before you see the paper.
Any tutor has finished teaching on that thing, you need to stop. Right? The main goal is your what? Your pre-scene, right? Now, before pre-scene must come. Now, when we past questions, so it is those same past questions, they are those same past questions which are still going to be asked. Even if they are twisted, it's still around the same topics. Do you get the idea? Now, this is something that will help you. I won't lie to you. Just make sure that all the questions have been answered. Even if you haven't read the case, look at the questions under the case and their solutions. Write it somewhere, get a notebook. Every day, even if every day you have to write one question, write its solution and just memorize and understand and just dive into that topic and see what is around there. It's enough learning for case study. And you pass without struggle because it's becoming too much of a headache. Do you understand? Please, are we on point? Are you going to do that for me? If you do that for me, trust me.
Yes, sir.
I'll give you everything you need to pass once and for all. But if you do not put in the effort, when I even teach you, it's like sometimes you give students areas, they don't even look at it. They go and then they'll be like, this thing, you could have told us long time. Why did you wait until now? Or the time you told us, we forgot. We didn't go through. It's not the best, right? So I hope everybody will do that. Okay? Just tell yourself, 1 week, a past question must go. Every week, at least one past question must go. If you have that goal, one lady came to me, I think the night before last night, that's 2 nights ago, right? She had come with an MBA, no idea. The MBA she did cry. She did it boha. It wasn't that good. And she has learned since a long time. She has been working, so she said she couldn't afford to pass. She was writing 5 papers. And this same strategy was what made her get all 5. She was even amazed. And you know, that's how God works. I tell people the grace of God and the ability to learn is all you need. She got 50, 50, 50, 50, 50. And then PSA, she had 53. She was shocked. Just a study move can make her fail. 5. She had 5 papers. And she has been dormant for a very long time. So what shows you that you are not dormant? What shows that you cannot make it? You can. It's just determination and listening. My problem is that students do not listen. They feel like, okay, everybody, yes, I know. One thing I must also advise you is, please, if you want to learn, right, it is not about the tuition center alone. Some people, they have so much confidence. Oh, this guy is going to take me through. Oh, I'm covered. What about you yourself? I know students who attend 5 classes. For what? You even get confused. Pick one, stick to it. Discipline yourself. Please, are you listening? It's not always about, oh, they said this guy, his questions dropped last night too. Then you go here. They said this guy, his question drop. No, stop fishing. Focus on yourself. The syllabus is your guide. Whatever every tutor is teaching, it's still the syllabus. But just that some people have a better way of explaining things. You get somebody like that, stick to him. Even if you fail, still stick to that person. Learn. If others are making it, why are you not making it? I keep telling people, okay, some people joined the class, they made it. Why didn't you make it? That means there was something missing. It's either your time. I told you, if somebody is lacking competence, right, it's because of 3 things. These are the threats to competence or the things that may lead you to breach competence, right? Rate. It's either you had insufficient resources, insufficient information, or insufficient time. Anytime somebody fails in an exam, it is because of these 3 things. You weren't having enough information, meaning you didn't know what to study. You didn't have enough time, which is mostly the causative factor. This is the major cause. People will not have time, right? The time that you have to learn, you feel like, oh, today I'm tired, oh, let me watch a movie. But remember, success is not about motivation. You don't need to be motivated first. It is about consistency, showing up every time, even if you do not feel like. That is what success is. If you want to be a good student, you want to pass. Me, I say pass ICA. Let that burden get off your head. And you see the way air will blow you. Do you get what I'm trying to say? You can make it. I believe you can make it. If I can make it, you can make it. Right?
Senior. Yeah, me for me, I don't have access to the past questions, so I will get me some.
Oh, just text me. It's on their page. ICA. Let's go to icagh.org and scroll down. You see the past questions and solutions. I hope that's okay.
Please, which year should we start from?
November 2015. Just start from November 2015.
November 2015.
Yes, and I believe that by the time you are writing, you would have covered all of them, because looking at now till June, July, you should be fine. Just make sure every week, even if every day you take one whole past question when you come from work. I didn't say learn it to. Question, solution, where you do not understand. You can discuss with your colleagues. You can send it to your tutor. That is how we learn. So I do it, you're also doing it. Then we are all balancing each other, right? I like it that way. That way you are so much exposed. Yeah, I like it that way. But some people, before even sitting the exam, they have no idea as to the kind of questions that will even be asked. And you say you are preparing. Actually, the ideal student for an ICA, I remember ICA used to do orientations. An ideal student should have some materials. 1, it's a recommended textbook, right? Please, I hope you are writing it down. A recommended textbook. 2, it's a supplement textbook. Another textbook written by somebody, which is good. Are you getting it? Then 3, you need past questions. You need past questions. Then you have mocks questions from the institute and other people or other books or whatever. Are you getting it? With this alone, you are fully prepared. Are you getting it? This is materials. But all this requires good tuition. And good tuition doesn't mean it has to be too long, but it should give you what you need. So good tuition plus these things are enough for you to pass. But ask some student, apart from class, he doesn't have any material or no any textbook. He doesn't have any supplementary textbook. When you mention book, oh, it's expensive. It doesn't even have past question to talk about mocks from other places. You get the idea. This one, most of the books provide it, so don't worry so much about this, but it helps if you solve. But most of you, I believe you are in the working class, you are the busy professional, so at least have 2 textbooks, one which is recommended, because see, you cannot solely rely on ICA textbook alone to pass. Do you know why? Because of practice, because some books are there that offer a lot of examples. ICA's examples are mostly illustrated, right? That is why we require supplementary text. Past questions, you have to print them, make them a book, nice book. Question, solution, you are going through. And this one works. It works for every professional course, not only ICA. You can do the same for ACCA, you can do the same for CIMA, CPA, CFA, anything. PMP, it works. You can do it for anyone. And it will work like magic. It has worked for me. It has worked for people I've trained. It can work for you too. I hope that is okay. So now, let's make more use of the past questions and avoid attending more than one tuition center at a time. Okay, one, stick to that one and see, evaluate your results, right? If it doesn't go well, try again. If you know only that in your batch, people passed, you didn't pass, that means the problem is you. You need to set up, check where you have your faults. That means it's not the center, it is you. And one of the frequent reasons why people fail is that they change tuition centers all the time. Immediately he went and his friend said, oh, Charlie, this guy's question came. You are fishing for questions instead of knowledge. Please avoid it. Because you go here, the format is different, especially management accounting. You leave here, you go here, the person is using a different approach. You leave here, you go here, different approach. So you yourself, what are you learning? You go and then the same thing. You're like, oh, this one, I'm familiar with it. So even if you are introduced to something which is better and simple, you still will not accept because this is what you are accustomed to. If you fight for the knowledge, trust me, you will not go and come back. But if you are only looking for questions, you will always go and come back. So that's the little advice I want to give you. Remember, if it has to be, it is up to you. It is not up to any lecturer, any tuition center. No. You yourself, tell yourself, what is my approach, my strategy for this diet? Sit down with you and God. Sit down alone in your room and journal. Ask yourself the strategy you have put down for yourself. And then you can add tuition. Me, I told you, I'm there for you. My team and I, we are there for you to make you pass once and for all. But you also need to devise a strategy for your own self. Are we okay? I hope that makes sense.
Yes, sir. It makes sense.
So,
Nice.
Yes, sir.
don't take chances. Don't take chances. If you are learning, understand. You don't understand. That is why tutors are there. Before, when we started ICA, they told us that the tutor is only supposed to do 30%. Then the student has to do 70%, right? But sometimes I'm the one doing 100% for the student, which is so bad, right? Because sometimes you teach something today, you just go and ask them tomorrow, now they've forgotten. Because they'll be like, say, pressure, family. Once you have committed yourself, why don't you finish it once? Right? So that was just by the way. So with strategic case study, it's one paper that can be quite frustrating. Okay? It could be quite frustrating because strategic case study is a lot. It involves a lot. Strategic case study, trust me. There are a lot of things you need to know. Okay, so when you look at it, the first part tells you to evaluate strategic objectives. And here, you have to look at definition of organizational strategy. What is strategy? You have to look at the levels of strategy, which is what? Corporate strategy, business strategy, functional and operational strategy. Apart from that, you have to look at factors that influence strategic objectives, like maximizing shareholder wealth. That's the primary financial objective, mission and vision. You have to look at stakeholders, and stakeholders, you see, the thing is about the strategic model. Though you see it like this, there are models, right? So for stakeholders like this, there are two models that you'll be looking at here, which is the position and importance matrix. Okay, stakeholder position and importance matrix. And then you will be looking at the Mendelow's matrix, which is what you learn straight from level 1, right? So one thing is that if you want to be a master of case study, you can look at the level 1 syllabus. Now, those who did level 1, some of these things like medulometry, they are so used to it. There are some models that are in level 1 that are still here. Anytime you go to the exam and then you do not perform well at that model, it tells the examiner you don't know anything. And it is true. You are going to sit exam and say, hey, boss, I didn't expect stakeholders, so he came. Do you expect me to still teach you stakeholders after what I taught you in class? Stakeholders is done straight from level 1. And every day you are talking about stakeholders. Balance scorecard is one of the key things that you do straight from level 1. It's in management accounting, it's in business management, it's in financial management too. I get it. So this one is a key model which will be examined most of the time. And then you look at core values and culture. Culture is done at level 1, the organizational culture. So anything done at level 1 is very important to the examiner. Then you look at how laws and regulations impact on organizational performance, right? So this one is actually for performance, okay? Your operating performance, how laws and regulations impact your operation performance. Like if there's a non-compliance, how does it affect the financials, right? So here it's all about performance. Then culture. Culture is very important as part of strategic implementation. Now you see that ethics can be on its own, but ethics is part of the first part, meaning ethics is very important. So you need to understand ethics, what ethics is, the theories of ethics, business ethics across the various functions, why ethical problems occur in business. This is a full question. This thing itself is a full question. They can ask you, looking at the business of IT Support Services Limited, what are the ethical problems that may occur? Ethics in a global economy, ethics law, illegal corporate behavior. So things like bribery, corruption, okay, fraud, embezzlement, all these things are illegal corporate behaviors that you have to look at. Then the core element of ethical reforms that happen, how to analyze ethical problems in business, right? There are some models that you can use, the same as models of ethical judgment. So you are going to learn things like American Accounting Association model, Tucker's 5-question model. Are you getting it? You are going to learn the IFAC model. You are going to learn the mirror test. Okay. You are going to learn Kohlberg. Okay, so there are a lot of them, right? Ethics and accounting, we learn how to make decisions. I get it, regarding accounting and ethical implications, like the threats and the fundamental principles that we looked at, right? They are still applied here. Are we okay? Then the next area that you will be looking at is what we call sustainability. So you'll be looking at areas around sustainability and how to use ethics to create a sustainable competitive advantage, right? So you are going to learn. So you see, when you look at ethics itself, after ethics is corporate social responsibility and sustainability. So you are going to look at corporate social responsibility. You are going to look at the theories of corporate social responsibility, elements of social responsibility, the limits of corporate social responsibility, the economic, legal, and social responsibilities by Carroll. It's a model, Carroll's 4 areas of social responsibility, the impacts of social responsibility in a global context, then implementing social responsibility programs, and the key elements of managing social responsibility. So you see, social responsibility and ethics are very broad, and students always, all they think about is strategy. They forget these parts, okay? So from there, you now come to strategy itself. So you start looking at how to evaluate various approaches that come with organizational strategy. So the system-based approach, the resource-based approach, core competence-based approach, rational strategy, adaptive and emergent strategy. These are all approaches that people can use to formulate strategies, right? Some of them are a bit informal, some of them are formal. And in our exam, our syllabus is actually, when you talk about strategy, it's made up of, should I say 4? Yeah, let me break it. So we have 1, the environment, resources, stakeholders, and then choices. So when you look at strategy in its own, this is what it entails, right? If you hear strategy entails these 4 things. Your environment, which is your external environment, resources, which is your internal environment, stakeholders, and then choices from where you need to go and how to choose from it, right? These are the things that you need to know. So from there, you go to syllabus reference B, where you have to prepare and advise on strategic analysis for a specified scenario. And here, you are looking at what? Your international environment. So you must learn how to use Porter's diamond. So there are 4 factors in Porter's diamond: factor conditions, demand conditions, firm structure, rivalry. You also have to look at the related and supporting industries. Then we have to know how to apply pestle analysis, right? Political, economic, social, cultural, technological, legal, and environmental. And here, you are going to ask yourself why that thing is an issue and why it matters to the organization in question. Why does it lead to an opportunity or a threat for the organization? That is all you are looking at. So all this environmental analysis we are doing, or these environmental issues we are looking at, is to create opportunities or threats, right? From there, you look at industry and competitive analysis, where we focus on the 5 forces, and then a strategic group analysis, which is a small group of people who we can analyze in our environment. They may be small competitors, right? But together they may have power. You have to analyze their position too. Then you look at how to prepare scenario plans. Assuming this should change, there should be a plan to implement. It's a scenario plan. Then we learn how to what? Analyze stakeholders and manage them. And I told you there are 2 models, right? The stakeholder position and importance model. We talk about stakeholders which support you or oppose you and how important they are to you, very high or low. Then we look at Mendeley based on power interest, right? Mendeley used a power interest approach to analyze stakeholders, right? So when you finish all these environmental models, you now look at, so it's like, what is in my environment? Then you now come and look at what I have. So first of all, if I want to do a business, what is in the environment that will worry me or will favor me? Then you look at what you have. That's your resources and competencies. So what you have is your resources and competencies. So that would mean you should be able to do a resource audit, analyze your financial, physical, human, and intangible assets, or you can use the 9M model, right, to do a resource audit. You can look at your core competencies and your strategic capability. Your strategic capability is your capability. That's your resources and competencies that can lead you to gain competitive advantage, right? And these resources that can create competitive advantage are unique resources. And the competence that can create competitive advantage is a core competence, right? You can analyze this by looking at what? You can use RUN, right? Resources which are rare, which are robust, which offer value, and are non-substitutable, right? Or you can use viral. You can look at resources which are valuable. They provide so much value. They are rare. They are inimitable, meaning people cannot copy, right? And they have organization-wide support. Okay, so the same way we can, apart from looking at this, you must learn how to use the value chain system to know how you are doing your operations, which things are creating value, and which things are destroying value, and which things you should eradicate. For me, that is how I use value chain when it comes to strategic capability analysis. I'm looking at how I can create value. What activities are not creating value? Which activities should be outsourced? Which one should I cut off, right? Because there may be some activities that are not providing value, and we are all about value. So this is the internal analysis side. So once you have been able to do that, you now look at key issues that arose from environmental analysis, and you are going to use them to do a position appraisal. Now, for position appraisal, you are going to learn how to do a SWOT analysis, which is a key feature of most questions, right? So if you are doing position appraisal, for me, when I say that do position appraisal, even with your SWOT or environmental analysis, I always want you to still consider the financial statement, compute some ratios. For instance, you're saying that the company has a strength, right? I can go and look at cash position. Okay, cash has increased by 30%. Is this a strength or is it a weakness? It's a strength. So I'll categorize this as a strength, right? That the company has a lot of investment, have staff strength. Compute some ratios, use it to comment. It speaks a lot about you, right? Case study for me is always about ratios. Now, then you learn other ways you can look at the impact of where you are standing. That's your position, like brainstorming and things like gap analysis. There's trend analysis, there's use of scenario plans. There are a lot of things, and they are all there for you to learn. But most of the time, I don't think ICS ever examined these because SWOT is better option all the time, right? But at least some theory what is brainstorming, how does it help in strategic position analysis, they can ask you, right? And you must be able to prepare and present advice on how somebody is performing with a strategic capability. And basically, this question is still around resource audit, right? You are going to analyze what the person is not doing well, what the person is doing well, and then you are going to comment on the scenario. All that is okay. So when that is done, the next area is now to look at choices, right? So you see, so far, the area we talked about was what? Environment. We talked about resources. We talked about what? Stakeholders, right? The next area will be about choices. You have some options, you must choose from them. Okay, so first of all, this area we are looking at what? The Portage generic strategies and the strategic club. You see, the syllabus specifically stated it. So some people go to the exam and say, oh, sir, I didn't expect strategic club. Why? The syllabus has specifically stated that it's either this guy or this guy that they are going to ask you. And you say you didn't expect this one. Oh, how? How can you tell me this story? Meaning you have not been reading your syllabus. You have not been looking at it. This is your Bible, oh. Basic information before leaving Earth. This is your Bible for case study. This is your basic information before leaving the exam, right? So that is it, your Bible. Okay, so once you know these models, they are competition models. These ones are, we call them grand and alternative strategies. These are grand strategies that every business, when it sets up automatically, some of them are applied, right? So you need to know them. Then you need to know about concentration strategies, or what we call intensification strategies, right? Every business needs to intensify its operations by doing three major things. Either it can do what we call market penetration, product development, or market development, right? So these are concentration or intensification strategies. Then if it cannot do that, then it can diversify, meaning change to a different industry or even in the same industry by different activity. So it could be a related diversification or an unrelated diversification. Then we look at a company which is not doing well, right? If you are not doing well, then you harvest, meaning take money from there and use it to support other operations which are doing well. So eradicate non-value adding activities, add it to somebody, or just play defensive, right? Like buying shares back, share buyback, or doing liquidation strategy, or a bankruptcy strategy, right? Or sometimes we can do turnaround. All these things are examples of turnaround strategy. Okay, we can even do what we call pruning, cutting of activities which are non-core activities, like or divestment, completely selling off the business. Okay, these are all harvesting or defensive strategies. Then we can have a combination of either of these strategies. We call them combination strategies, right? So these things you just need to know. Once you know them, I think when you get a question, it can open you up. But students do not learn up to that level. I don't know why. I hope that is okay. So we must be able to apply and appraise key strategic product and service development models. So here, this, you see, after we looked at the corporate strategy models that we have up there, you see, IC has particularly told us that know this service and product models. So BCG matrix, very important. Then the life cycle matrix. These things are the most likely all the time. They are mostly likely because you did it in level 1. Okay, anything you do at level 1 is always likely because that one they assume you have prior knowledge. Then the directional policy matrices, so McKinsey, the GE business screen, and Shell directional policy matrix. So far, this one has been examined, this one has been examined. The Shell directional policy has been examined. McKinsey has never been examined. Who knows? I'm just telling you for telling sake. Do you understand what I mean? Public service metrics by Montanari and Braca has never been examined before. Who knows? Corporate parenting styles, asset portfolio display. Now they are going to feature every diet. Almost every diet, expect to see these things there because in the new syllabus, there's a whole section for this one alone. Let's go and see. See, when we go to the new syllabus, I just want to show you something. I hope the analysis we are doing is helping. I hope the analysis we are doing is helping.
Okay. Yes, Prof. Yes, Prof.
So let's see something. Where were we? You'll be doing more of risk. Everywhere you pass, risk or IT. That's a new. What is it? So you see, as part of your syllabus, there's a whole section just for corporate parenting. Can you see? Can you see?
We can see.
Meaning that now when you go to the exam, corporate parenting is not a subset of another area to say, oh, it is not coming. No, it will come. It is there. Value adding, value destroying activity, corporate parenting rationale, whether you want to go as a portfolio manager, a synergy manager, a parental developer. Now look at the parenting styles: financial control, strategic planning, strategic control. You see? So you see still here, it's still the generic strategies and the Bowman strategy clock. You can see. So it's still the same thing. The syllabus didn't really change, but now they introduced more of IT and governance. Plenty. So you see, corporate parenting, very, very important now to you. Then we have Ansop's growth vector matrix, which is actually the matrix that builds on the other ones, right? So this is a directional matrix, your corporate parenting direction. Where do you want to go, right? So this one groups, Igor Ansop groups the diversification strategies and the intensification or the concentration strategies that we saw. So this one has all those ones, depending on the market or the product. You can have market penetration, market development, product development, and then diversification, right? And even diversification can be broken down into related or what we call concentric and unrelated diversification. And related diversification could be a vertical or it could be a horizontal. And a vertical could be a forward integration, or it could be a backward integration. Okay, so as part of diversification is also what we call integration strategies. And these ones are the integration strategy: vertical integration, horizontal integration. Okay, so they are all there. And this model is like combines everything we've looked at from the top, right? That is it. So once you have been able to identify these, the next area is to be able to understand international strategy choices, right? And making international strategic choices, you need to understand the international marketing mix, or what orientations or what attitudes management have towards foreign markets, right? That's the EPRG framework: ethnocentrism, polycentrism, radiocentrism, and geocentrism, right? Framework. Then we have to look at the IR framework, right? Are we going as a transnational business, a global business, multinational business? Are we looking at that? Okay. We look at the 5 stages of globalization by Kenichi Omei, right? Then we look at the methods that we can use to employ international strategies, which are actually the strategy choices, how we decide to go into international markets. We can decide to go there through exporting, either direct or indirect exporting. We can decide to go through using joint ventures and other collaboration strategies. We can decide to go by licensing. We can decide to go by franchising. There are all ways we can enter into foreign markets, strategic alliances, or own a wholly owned subsidiary. And these are all models of contract manufacturing. So once you have been able to establish all this, the next area is, okay, how do we want to do all these things that we have said? You see, all these things are strategies we decided. Do you all agree? Do you all agree these are all strategies?
Yes.
But now, how do you want to do it? Do you want to do it alone, or you want to do it with somebody? You doing it alone is what we call organic growth or internal development, right? And mostly at this level, any question on strategic choice at your level or anywhere that you're doing strategy, even in SEMA, we only focus mostly on the pros and cons, right? So questions here are only about pros and cons. So what are the advantages of you pursuing internal development over mergers and acquisition or external growth? Or they will ask you whether the choice that was selected meets SFA or financial implication. These are the 3 questions that any examiner in the world can ask, but ICA usually does not focus here. ICA's focus is either on the pros or cons, or whether it's suitable, the strategy chosen is suitable, whether it's feasible, whether it's what? Acceptable. Are we okay? So this is, when it comes to these areas around strategic choices, these are the questions that ICA will basically be asking you. I hope that is okay. So from there, once you know internal development or organic growth, the next area is to look at what? External development. And external development comes from two areas. Either you are doing joint or collaboration, right? Joint development. Joint development means you want to grow with other people, or you are doing collaboration strategies, collaborating with other people to grow, or you can do mergers and acquisitions. You can merge with other people or acquire other businesses, right? This is how you grow. This is how you want to implement, I get it, those strategies that you suggested above there, right? That's how you want to go about it. Now, there are some other ways you can create strategies, right? You can use an incremental approach. That is where you try to extend past policies little by little. Also, you can use freewheeling opportunism. Like when an opportunity happens in the environment, you just take advantage of it. You can do creative strategy or innovate and create something new out of the blue. You can work as a learning organization to bring out new models and become innovative in the future. So you see that suitability, acceptability, feasibility thing I was talking about. They can ask you most of the time, right? As part of strategic evaluation. Okay, so all these things are part of strategic evaluation. And this one covers a chunk of your syllabus. I hope that is okay. So once you have been able to look at your strategy, evaluate it, the next area is to put people to work. And putting people to work depends on some things. One, you must first what? Look at your organizational design. Because if I want to put people to work, don't I need a good place? I need a good place, right? So I need a suitable organizational structure. Do you all agree? That is it. Two, if I'm designing my organization, I need to also enable change, right? So we need to enable change. So change management becomes very important, right? To manage people. The next area is that, okay, how do I check whether these things have happened? I need to be able to measure performance, right? Performance measurement and management. So when it comes to strategy implementation, these are the three key areas: organizational design, enabling change, and performance management. If you know this, look at the ICA past questions, you realize this is the trend. It's either a question is coming from organizational structure, the question is coming from change management, the question is coming from performance measurement or management. Do you understand? So when it comes to organizational design, I hope some of the things I say, you write them down, because some of them you can see is literally not in the syllabus directly. I categorize in my own way. Who has noticed? Who has noticed that some of the things I categorize them in my own way?
Prof, I do.
So you should be jotting some things down when I tell you to. Oh, that's okay. Okay, so with that being said, let's continue. So you have to understand flat versus tall designs. Okay, every organization has a way it is organized. We have organizations which are flat. When we say flat organization, it means that the number of subordinates directly under a superior are more. So a flat organization looks like this. There's the boss, right? There's the boss, and then we have, you can see, we have plenty people. Okay, this flat. We call it flat wide most of the time, right? Then we have tall organizational design. So we have the boss, right? With two staff. Now this staff is also boss, also maybe with some staff. This staff is also boss with some staff under, right? This guy is also a boss with maybe some staff under. Okay, so you see this one is relatively tall and this one is flat and wide, right? So you must understand which one, how is this necessary or relevant to the particular case that they've given you. So everything they give you, ICA has made case study so easy that it's purely theory. And that's why people are failing, because they can ask you anything from anywhere at any time. You just have to know. Unlike particular case studies where it's that open and you can suggest anything you want to suggest, ICA has limited you just so that it will be easier. Because if they want to go international standard, I'm not sure you want to write ICA again. So I think that is still better. Okay, so let's see. So you have to look at responsibility, authority, and accountability. These ones are mostly theory related, but they can ask you some small questions. Okay, line, staff, and functional relationships among organizations, like various departmental heads. Okay, then you have to look at organic and mechanistic approaches. And this one is a contingent approach to organizational structure. And anything that is contingent It's very necessary for exam. So let me show you. You see this organic and mechanistic approach is very, very important to your exam. Centralization, decentralization, very important to your exam, right? And resource sharing and collaborative working. So I've highlighted some things. 1, 2, and 3. But Bill, what about the other ones? Yes, they are there. But these 3 areas, okay, differentiation and integration could also be there. These 4 areas that you are seeing, if you will not learn anything under this area, at least know these ones, because these ones, they always pop up, right? This thing, resource sharing and collaborative working, is part of collaboration strategies, right? Like using management teams, outsourcing, pooled budgets, okay? Consortiums, they are all there for you. Hope that's okay. So apart from that, you know the various types of organizational structures, the advantages and disadvantages from an entrepreneurial or simple structure, functional structure, divisional structures. And remember, some of them fall into each other. So just know the differences. So you see those collaboration strategies I was talking about, you see them here. So here the syllabus was specific, which people do not look at. It means that you can go to the exam and this time they will decide to ask you what's shared services. They can ask you outsourcing. They can decide to ask you what is a pool budget. They can ask you what are networks for collaboration. You see? So from there, you have to know the McKinsey 7S. We have been waiting for this thing and it has never come. Who knows? Maybe this time they are going to ask you 7S. Then Henry Mansberg theory of organizational configuration. So when you look at the Benz and Stalker, the organic and mechanistic structure we looked at, McKinsey and then Henry Mansberg. This 3 that you see here, they are the contingent, it's around contingent approach to organizational culture. And these are the most pressing ones, okay, that you need for strategy. The other ones are there, all right, but when it comes to strategic management, these are the ones that are key strategic models that you need to master around here. Are we okay? Now, from there, there's a particular area. All these things we are learning, putting people to work, all that, are you getting it? The use of business planning, strategy implementation. We need to look at how to use business plans, meaning you must look at functional strategies, right? And using functional strategies means you must know HR, you must know finance, you must know how budgets implement, budget impact on your communication. I guess you must know R&D, all those strategies, you must know them. Then when it comes to using business plans in your exam, it's all about risk, because your business plan signifies the risk that you are going to face. So you see here, it tells you develop a performance management approach involving the identification of key performance metrics, both quantitative and qualitative. So you remember I told you that strategy implementation also has performance. So you see, from there, you develop marketing and brand management approach. So you see marketing is there. So IT, finance, marketing, all of them are there. And here, if you look at business plan in your syllabus, it starts with performance management, comes to risk management, right? Risk, very important. Then it comes to IT. Look at IT alone. See where IT goes. It even has cyber security and big data management. So this that to be very careful, because I'm sure the whole people will be made up of IT. You see IT alone. Look at business plan. See IT alone. How many? See everything IT has to offer. Even more than risk management. You can see impact on information system, relationship between information system and IT, role of information system and IT in creating competitive advantage, impact on IT on organization, impact on contemporary development in information technology, the impact of e-commerce in organization, cyber security and big data management. You can see. You get the idea. So you must know these things. These things are very important. Performance management. So you can see here, we have performance management. I get the line here. You have risk management. You have IT, HR. I get it. And preparing a business plan. Then from there, everything else is financial strategy. Financial strategy, you are going to know everything you did under financial management. It's still here, except cost of capital. They are not going to ask you any question on cost of capital. If cost of capital will come, then it will be relating more to gearing decisions, right? Preparing operating gearing, financial gearing, and its impact on various ratios. I told you here it's all about ratios. So you are going to learn stakeholders and their impact on your financial strategy, ethical issues in computations, okay, of your financial ratios and other things. But here, investment appraisal, Very important, especially the discounted cash flow techniques. Okay? Like MPV. MPV is the most important. They can ask you payback to and ARR. Lease or buy decisions, very important. Working capital and liquidity management. Here, the focus is more on the working capital financing and investment strategies, right? That's what they'll ask you. Then international investment appraisal, including transfer pricing and international risk management, like political risk. Then you come and learn treasury management, including how to manage what? Interest rate risk and then foreign currency risk. Okay, so that is it. Then when you are formulating financial strategy, look at what do we call it? The methods of finance or the modes of financing, short-term, long-term financing sources, right? So short, medium, and long-term alternative. How do you raise new capital? How do you issue new share capital, right? The issues of new capital, gearing and capital structure, and then dividend policy. You must be careful. Dividend policy has never been examined before. These ones all have been examined so far. Dividend policy has never come before. You realize that anytime I get to some place which has never been examined, I talk about it, right? Working capital and liquidity management, the first two diets, they were examined. How do you turn the liquidity process around and all that, right? But this has never been examined before. Issues of new capital have been examined before, right? Okay. Then forecasting financial requirements. A financial plan has never been examined, but it can come in the form of a business plan where you have to forecast some ratios and use them to prepare those ones. But I think forecast has come as a cash flow forecast before. That was the very first diet case study came. They brought a cash flow forecast, right? Which is example of forecasting financial requirement to go and look for a loan. Okay, so we look at evaluating alternative methods of financing and incorporating the impact of tax and selecting an appropriate financial plan. So this one mostly they related to gearing. Then being able to prepare a financial plan and evaluate the impact of uncertainty on the plan. So here is where we use what we call certainty equivalence, right? So we are going to use probabilities or something that we know as expected values. Who has said expected values before? So here we'll be using expected values, meaning we are looking at what? Our cash flow times what? Probability. Okay, the sum of all cash flow times probability. So let's say they tell you that, okay, if you look at the economy, okay, if the economy is stable, there's a chance of what? There's a probability that the economy will be stable is 30%. And then the cash flow that you're likely to earn is, let's say, 100,000 or so. If the economy is strong, there's a what? 20% chance the economy will be strong. And then you are going to get cash flow of 200,000. And if the economy is weak, there's a 50% chance that the economy will be weak, right? And then let's say the cost there is 300,000. So if you want your expected monetary value to use in what? Taking or creating this financial plan, you are evaluating the impact of this uncertainty, right? Of this probability, meaning there's a 20% chance, 30% chance, and 50% chance this will happen, right? So what you are going to do is that you take 30 of the 100, that means you are getting 30,000, you are getting 40,000, you are getting 150,000, right? And then the expected monetary value you are getting from this is what? 220,000, which is the expected monetary value. So assuming this is your revenue and they give you some inflation, you are going to base on this and grow it by inflation, let's say 10% every year. Then you use it to do your appraisal. You get the idea. So basically that was about financial management. And then the next area is about corporate governance, and that marks the last area. So you must be able to describe and explain the meaning of corporate governance frameworks, mechanisms, including the consideration of the meaning and importance of corporate governance, the theory aspects, which are the various theories of corporate governance. You can see them: agency theory, stewardship theory, transactional cost, and stakeholder theory. Then the role of the board, very important. But now in the new syllabus, this one is a lot, Papa. See, let me show you. You see now they even included shareholder value analysis and EVA, meaning now you'll be computing EVA, and computing EVA is a lot. It involves a lot actually. Now EVA is being included and shareholder value added. Okay, so that means that now the journey is not a small one. You will learn Ankasa. Those who want to write next diet and don't want to pass this diet, you are welcome. Look at what you'll be learning for corporate governance alone. See, you will be learning the State Interest and Governance Authority Act 2019. You'll be learning the Bank of Ghana Corporate Governance Disclosure Directives. Corporate governance in the Companies Act. You'll be learning it. Corporate governance in public sector and private sector. The OECD principles is already there. The role of the accountant in corporate governance, which will involve some small calculations. I get it. Like board remuneration calculation and other things, and explaining governance framework and key principles. So you see, the new syllabus is not a joke at all. Not a joke. But here, look how easy and straightforward. Okay, directors and the board structure, the role of non-executive directors, role of directors in corporate governance, executive remuneration, role of institutional investors, internal control and corporate governance, the role of audit in corporate governance. Then you see, this one was on its own. Describe and explain the principles, the OECD principles. See, every time I meet students online, I keep saying these things, but they'll be like, oh, sir, OECD principles came last night, it will not come. Please avoid this. See, it's on its own. It doesn't have anything, meaning they can examine it 100,000 times. Like last night, last 2 nights, last 3 nights, OECD came. The previous night I said it came, it won't come again. It still came. Last night too, it still came again. That should tell you this is important. It is one key principle. It is important for governance. Yeah, they'll be like, oh, sir, it came last night, it won't come again. I told somebody, corporate reporting, gave him likely standards, gave him earnings per share, gave him a business valuation. You know something? He threw it away saying that these things came last night. He went and it was there. He's now crying. Please stop that thing. Stop predicting. You are not the examiner. Learn what you are supposed to learn and go and stop saying it came last night. Are you the one who wrote the paper? You are not the one who created the paper. Just prepare and stop. Oh, I am not sure it will come. I hope that is okay. I said this time be proactive. Oh. Just be proactive. Be ready to pass because there's no guarantee that next night will be. Maybe you are taking a different paper, but for case study there, if you want to pass, this is your time. Because next night the paper will change significantly. I'm trying to tell you the gospel truth. Are we okay? Yo. So from there, you learn how to describe the role of the accountant in the corporate governance process, describe and explain governance framework and key principles, and apply, evaluate, and recommend actions for a specified scenario, meaning there'll be a case where you have to identify symptoms of poor corporate governance, good governance, including specific consideration for code of ethics. And then sometimes there'll be what audits and then a bit of what internal control issues around it. But you know something about case study that I want to talk about when it comes to governance. Look at something. When it comes to corporate governance, the exam, the textbook tells us the areas they are going to examine. It says for no best practice to corporate governance, key roles of the chair, CEO and NEDs, committees of the board and their purpose, remuneration of board members, disclosures relating to corporate governance, and governance issues in not-for-profit organizations. And if you look at the trend of the ICA exam, these are the only questions that they've asked. They have never crossed this. And I've always been saying this every time I do syllabus walkthrough, every time I do class. But students still do not look at it. Why? It's painful. Oh. You keep saying that this is where you should focus, and they are looking at other things because somebody has said this thing is coming. Stop that this thing is coming and focus on what is. Anyway, I rest my case. So that was it for the level 3. I think for level 2, those who are doing level 2, let me see by hand. Let me know those who are doing level 2. That ended level 3. Let me know those who are doing level 2. Management accounting, financial reporting. We need to have special session for you guys. Because level 2, there are some few changes we need to talk about. Is there only one person doing level 2? Okay, nobody is putting up his hand. So Joseph, right after the class, we'll talk. Okay.
Yes, sir.
Yeah. Right after the class, we'll talk. See, you're also doing level 2. Which course?
PSA, please.
PSA. Okay, that's fine. So right after the class, just text me. Just text me. We'll talk. Who else? Okay. I think that's okay. I am Visa. What course, please?
PSA.
PSA. Okay.
Yeah.
Okay. That is fine. Okay. So those doing level 2, we are going to arrange a special session for you, eh? And also, there are some things you need to also know for now. For those writing level 2, there are some things you need to know for level 2 because of the change in syllabus. There are some few things that we have to talk about. So possibly after the session, you can kindly reach out to me online and then so one thing you have to know is that class effectively starts on Monday. Monday, I'm starting strategic case study, and I'm not waiting for anyone. Okay, as all videos will be recorded and accessible. I'm ready to help you pass, but I told you have a strategy for yourself this time, and be ready to kill it once and for all, so that we can all celebrate together. I hope that is okay.